You want to stop using those credit cards. You want to get them out of sight. Don't cancel them. Don't get rid of them. Just put them out of sight. It's funny. I had a friend who took all their credit cards. They put it in a bowl. They put it in ice. They put it in the freezer. It got frozen and just left it in there. Weird story, but hey, it works for them because if you want to use it, you got to break that ice. So you got to let it melt. Hello and welcome to another episode of the Family Man Building a Brand podcast. Today is another teaching moment. And with these episodes, we like to just teach. We like to break stuff down. We like to give value, give information that you can actually act on that can help you either further your business as an entrepreneur, small business owner, or personally in your life. So today we're going to be tackling credit and debt. We actually did an episode earlier, Ralph and I, where we talked about money habits, and we broadly just talked about money habits as it pertains to debt and credit. So today we're going to do a teaching moment, and we like to call them, where we do a deep dive into helping you figure out how to sort out these things. For me, personal finance is something that's very near and dear to me because I am an immigrant. And I have probably gone against the grain when people said, don't get a credit card. And I did. And I found out the negative effects of getting a credit card. But what I also did was figure out how to get out of debt myself with the resources that were available without probably ever having to pay somebody to do it. So it was a slow grind. There was a process by which I did all that stuff. And it's helped me to be able to figure this stuff out. And in turn, I want to pay it forward by putting this information out there so other people can utilize this information to figure stuff out. So today we're going to go through essentially figuring out how to manage or build your personal credit for those that don't, but also how to manage debt. I do believe that I don't know the stats to this specific one, but there are probably more people in the United States or maybe around the world trying to figure out how to get out of debt that maybe actually trying to build a credit profile, because I think most people don't deliberately get into debt. Life happens and they get into debt, and then they probably reverse engineer it now where they try to figure out what happened, how they can fix it, and then how they can actually build that moving forward. So we're going to talk about it today. Now, with all of this said, it's interesting. I heard something that says, this is why you need a significant other. You sign if I can't, significant. And as most of on this show, we try to make everything for us about the name of the brand, Family Man Building a Brand, wherein we have significant others that help us in this journey. And it's a partnership. For those that don't, we're not saying don't listen. We encourage you, obviously, to figure that out, whether it's with your friends, whether it's with your family, whoever. In most things, when you succeed in life, you don't go at it alone. You go at it with a team. So for us, our team is our significant others, our spouses, our children, our family members. We help figure out this stuff and talk about it. So for me, like I said, my journey has been interesting with personal finance. I've gotten into debt. I've gotten out of debt. I've gotten into debt. When we were ready to buy a house a couple years ago, I leveraged my knowledge to help my wife build up her credit so both of us could get over credit scores of 750, and always aiming to have very good or excellent credit scores, and we keep it there. So remember this, you're building your personal credit to help you build your life. In America, it's inevitable. You cannot avoid it. Now, you might get to certain levels, which most of us are not there, where they say credit's not important. But for the everyday American trying to figure out life and trying to get through life, you need to figure this out. Here's some of these stats. This says the average American carries $90,000 in debt. This is a lot of debt, which supposedly credit card debt is about 1 trillion right now. 38% of households making between 50 to 75,000 a year have more credit card debt than emergency savings, the highest in that income bracket. 3% of Americans have more emergency savings than credit card debt. That's 3%. So you think of the number, it's supposed to be a positive thing, but only 3% of Americans have more emergency savings. There's, I think, 78% of Americans live paycheck to paycheck. And when you do the math of, we're talking about American adults who figure this out, American household holds $11.67 trillion in debt. Now, some of this could be your mortgages and stuff like that. But what we have to try to get out of is consumer debt, which then includes your credit cards and all these other things that really don't help you build wealth and build all these things. So today we're going to do a quick dive into this stuff and understand your credit profile. Now, most people, before you even start thinking, yes, I know you want to figure out how to get out of debt, we're going to get into that, but you have to understand your credit profile. Your credit profile is built into 5 separate scales if you want to take it, and I'll break it down for you and stuff like that. The biggest part is your payment history. So this is whether you pay your bills on time or not. That accounts for 35% of your credit profile. Then you have the amount owed. Now, this is how much money you owe and your credit limit. That accounts for 30% of your credit profile. Then you have your credit history. How long have you had your credit? So this is why they normally tell people get frustrated. They want to close their accounts. Maybe when they pay it off, don't do that. It accounts for 15% of your credit profiles. How long you've had it matters. And then the other 20% is divided basically into your credit variety, what types of credit. So whether it's credit card, whether it's personal loans, whether it's student debt, whether basic things like that, your phone bill or things like that, 10% of that. And the other 10% is for new applications. So this would really help where you're building credit, you have a decent credit score, and you want to increase your credit limit. Then you apply for new credit cards. Obviously, we all know that every time you apply for a credit card, it will ding you and your credit score will drop. But if you have good credit, I don't think that's something you should worry about. Now, don't go opening credits accounts all the time just because you want to accumulate debt. That's not a wise way to do this stuff. Like I said, now payment history, if we go into that, you need to pay, you want to make sure you're paying on time. You want to make sure you're doing stuff like that. The amount owed. Now, this is where your credit utilization comes in, which normally you want to keep it under a 30%. So I like to use simple numbers. If you have a $10,000 credit limit, you want to keep the debt on that credit limit under $3,000 at all times. So you do the math. If you have 100,000, you want to keep it under 30. And that's why I don't even use big numbers, because 30,000 is still a lot of debt, in my opinion, no matter how you slice it. But you want to keep it under 30% to be on the safe side. Now, like I said, your credit history, the longer the better. I think I've probably had mine for maybe about 17 years or something like that. So the longer the better. Again, it goes to your credit variety, which is 10%. Now, like I said, these are car loans, credit cards, student loans, and all that stuff. And then you have your new applications. Now, an easy way to figure all this stuff out is, for everybody out there, there's an app called Credit Karma. And I'm not trying to endorse it or get anything from it, but it's an easy way where you can get information about helping you build your credit. Once you set up an account, you log into it, it breaks down these things for you to be able to figure out this information as best as you can. Now, I think even because of accounts like Credit Karma, for us, all our banks are offering this, from Wells Fargo to Chase to American Express. All of them are offering you information about your credit these days. Before, maybe 15 years ago, this was impossible, but there's so much competition, there's so much information out there that it only makes sense that they offer you this information. But Credit Karma goes a step further in helping you figure out how to eliminate that. Now, there's a benefit for them to doing that, but at least it tells you what you can qualify for, what you can pre-qualify for. It gives you a lot of information about your debt, which breaks down that credit profile, so you are able to make informed decisions of how to easily get yourself out of debt and stuff like that. So I think get yourself a Credit Karma. It will help you greatly and things of that sort. Now, like I said, in order for you to be able to build your credit, you have to understand your current credit situation. You really have to understand your current credit situation. So by doing that, you can actually request to get your credit report from any of the major bureaus like Equifax, Experian, and TransUnion. Those are the 3 main credit bureaus that report your credit, and most banks will deal with either one of them. You can actually request a credit report, and once you get that credit report, you want to go through it to make sure to identify any errors, inaccuracies, or negative items that might need your attention. This is now you building up your credit. You've understood all the different parts of your credit. You now need to figure it out. Now, I guess this is where there's a lot of people out there in today's world that are helping people repair credit. These people out there can help you with eliminating these errors and inaccuracies or negative items on your credit. I don't do that. I always say the best way to get out of a credit situation is by paying off your debt. But for some people, it's not as black and white as that. There's a lot more information that comes with that. Now, as you figure that out, your goal is to establish a positive credit history. You want to start building it one way or another. And for people who haven't started, you can become an authorized agent on somebody else's credit card. You have to be very careful with that stuff. But I think this is more so for younger children, maybe your kids who are 18, maybe not or even if you're an adult self, like I said, for an immigrant person, if your parents already have established credit, they have good credit, you can latch onto them. For your significant other, it helps because let's say you have a credit card that has a $30,000 credit limit and you add your wife to it. That automatically helps her boost her credit limit because now let's say she had $10,000, you add 30, now she has $40,000, but let's say she was keeping that 30%. She only had less than $3,000 recurring on that credit card, but now she has $40,000 total credit limit with a $3,000 recurring debt. If you want to put it that way, her credit card score bumps up. So these are things to keep in mind where it helps you with that type of stuff. You want to make sure you have low credit utilization ratio. Like I told you, keep it under 30%. You want to have a good payment history. The easiest way to have good payment history on your cards is to literally just automate your payments. I think if you automate your payments on all your credit cards, it's going to be very easy, which then brings it to the third point of trying to figure this out is make payments on time. It's as easy as that. Make your payments and put everything on auto pay. Because I don't think a lot of people are disciplined enough to remember. Now, if you don't want to make auto payments, find another system by which you're going to keep track of this stuff. Let's say you are putting, what do you call it? You're putting reminders, calendar reminders, somewhere where it's popping up for you every so often when it's due to make those payments on time, but you want to really make those payments on time. So that's the third one. The fourth one is diversify your credit mix. Now, you want to, it's like one of those weird things where you say diversify your credit mix, where it says go get more credit cards. It's not necessarily go get more credit or more debt, but you want to make, this is what helps. You want to make sure you have a mix. Most people have student loans, so that's already one part of it. Most people have car loans. Most people have installment loans. Most people have credit card. That's already 4 different things. This is why people have a lot of debt, but you want to keep your limits low. Like your car loan, it's not you need your car. Now, obviously we can go into it where how high your car loan is or high low. That doesn't really matter at this point. It's just having a diversified credit mix for this information that helps you build your credit. And then the fifth one is you want to monitor your credit frequently. That's why I said Credit Karma. The beauty is our phones today will remind us. You get your Credit Karma app, you turn on your notifications every time your score goes up or down. Sometimes it could be a little too much, but for me, it's never too much. You want to know because it encourages you and it makes you feel good when your credit score is going up, and as you're fixing it, every so often it reminds you. So every month, this information gets reported into the credit bureaus. They do what they need to do in the back end. They give you a credit score. And as that score is increasing, yes, Credit Karma has a slight difference between your actual score and what they put in there, but it's not that much of a difference. So it's not like by maybe 100 points or 50 points. I'm not quite sure. I will do the research exactly what that difference is, but at least when that score is going up, it tells you. And if the score comes down for one reason or another, don't panic. If you have a plan to pay off your cards, just stick to that plan and just monitor it regularly. Like I said, keep using your Credit Karma, use your bank, but just at least be able to, I would say every quarter, be able to go in and check on it. I do it way more frequently than that because I want to make sure I'm staying on top of these things. So that's something that's definitely going to help you. So these are like the 5 things I would say can help you build your credit profile, understand your current situation on your credit. You want to establish a positive credit history. You want to make your payments on time. you want to diversify your credit mix, and you want to monitor your credit regularly. So now that we figured out how to build personal credit, now, like I said, most people, it's which one comes first, because sometimes people get in debt. In order to get out of debt, you have to put a lot of work and effort into it. It goes hand in hand. I will just give you this three ways, which I've just easily said, okay, this is the way people can get out of debt for people that are in debt. Three things. I'm going to list them, and we're going to talk about them quickly. You want to create a budget and stick to it. Have a plan. And then there's two ways by which you can tackle credit. There's a snowball and avalanche method. I'm going to get a little bit into that. And then obviously another way which has worked for me and a lot of people that I've recommended it to is debt consolidation. Now you need to have some kind of decent credit to get better interest rates with this debt consolidation, but it helps. And I'll tell you exactly how it helps you. But for the first one, it's simple, but it's the most challenging part of it, where you want to figure out, you want to assess all your income and expenses, and you want to create a realistic budget that allocates a portion of your income to debt payment, because you have to get out of it. So you're not going to say whatever is left over. Just like you would put money towards investing, we cannot be investing money when we're like knee high in debt. It doesn't make sense. So you, like Dave Ramsey says, you have to find a way to get out of it or drastically reduce your debt. Because trust me, there's sometimes when I look at when we are aggressively trying to get out of debt, how much money is going out to debt, and it pains me, but I'm just like, you know what? We need to do this. We'll get it done. And once we get it done, and this money can be reallocated to other things, for us mostly into investments and yes, living life. You want to also, as a quick tip, identify areas where you can immediately cut back. And the first place always is dining out, cook at home. Subscription services. I have a challenge trying to figure out how to cut these out. I've tried. I don't bother with those, but there's other ways. Impulse purchases. So for me, my maybe vice is I like Jordans. I like tennis shoes, but I'm like, I have over 20 pairs that I don't really wear. So that's my impulse buy. When I get that notification from the sneaker app, I just say I don't need it because I'm not going to wear it. That's $200 saved, could be every other month. And if you do the math for that, it adds up on a 12-month span. So create a budget, stick to it. Now, a way to get out of debt is the snowball or avalanche effect. If you think of how it works, it's exactly what it means. You choose a debt repayment strategy, which one of them, where the snowball involves taking the smallest payment first and gaining momentum to the larger debt. So if you have, I like to use these examples, 3 payments of 1,000, 3,000, and 5,000, you tackle the 1,000, then you move to the 3,000, then you get to the 5,000. A way I did it, I've used both, was I made a spreadsheet and I put all the debt that I owed. I put the amount that I owed, how much I make payments every month, and I listed them. So the 1,000, 3,000, 5,000, if you may. And as you make these payments, I put them in red. So I know the red is alarming. I need to get out of it. When I get to the low utilization, I change it to black. When I pay it off, I change it to green. So the more green I see, the more I feel good about my progress I'm making. So you're tracking the payments you make. You're able to tell a story, which helps you help other people. That's how I've been able to help other people, because I track this information every time I need to aggressively get out of debt. So when it comes to also the avalanche effect, so now this is more on the interest rate side of things. You take the interest rates, and my business partner, Ralph, and my co-host said, debt is really expensive, especially now in today's with inflation and everything. So think about it. When you're getting credit cards for 24%, that's a lot of money that you have to pay every time. Let's say you spend $1,000 or you have recurring debt of $1,000 just sitting on a credit card, accruing 24% every month for 12 months. There's something where it says if you have, I think, $20,000 in debt or $17,000 in debt, it'll take you 17 years or something like that to pay it off at about, when your interest rate is about 20%. That's a lot. It's scary. So you don't want to get in debt, people. I want to put the fear of God in you when it comes to spending your money and getting in debt, because there's no thing in saying, oh, it's okay. It's difficult. It's easy to spend the money, but it's very difficult to get out of debt. So you really want to make sure you allocate extra funds. For one easy way is when you get big sums of money, whether it's bonuses from work, tax refund checks, put those towards paying debt. Somebody gives you a gift that's a big amount of cash, put those towards paying debt, because it's that same money when you finish paying debt and it keeps coming. That's the money you're going to put towards buying your financial independence or freedom, towards investment. Got to stay disciplined with this one. I think you can either use the snowball or the avalanche method to get out of debt. Now, this is a quick way to help you boost your credit score whilst you're getting out of debt. But you have to be very disciplined with this. It's debt consolidation. So let's say you have $50,000 worth of credit card debt and you're paying the minimum and all these, which you shouldn't, because I've explained to you how the snowball or avalanche method works, where you're going to see progress, but you're making minimum payments. You're not seeing any progress. You're frustrated. You have a decent credit score. Let's say it's even in the mid, let's say 500s, 550, 600, whatever. You don't want to see, you want to see go to 700 because all your friends are talking about, yes, I got a 750, I got a 780, and you want to get there. You're going to reach out using Credit Karma. It'll tell you what you qualify for. Yes, if you have bad credit or not so decent credit, your interest rates are going to be high. But if you're maybe even in the 600s, you're going to get favorable interest rates, but it helps you compare the different banking institutions or financial institutions that are going to give you a loan and what rate. And it'll help you let you know your payments. So all that 50,000, if it's mixed in that variety again, you could potentially be paying maybe up to $5,000, $3,000 every month. Now you can go and apply for a $50,000 loan. If and when you get approved, hopefully you do get approved, it'll give you, the consolidation is to make sure you calculate all the debt you have. You tell them, they approve you. They will transfer $50,000 into your account, or you can list all the debt you want to pay off and they will automatically pay that debt off for you because you give them the information for the bank accounts or credit cards to pay these things off. Once you pay that $50,000 off, as far as your credit score immediately at that point is concerned, you have zero debt, and it reflects within that 30 to 45 day span to the credit bureaus, because it hasn't registered yet that you have this other debt, that you now have paid off $50,000 in debt. It significantly boosts your score. I've seen my score. I've seen other people's scores increase by 50 to 150. No joke, where it significantly boosts your score over 30 to a 45 day period. Now you're not out of debt. You still have 20, I'd say you still have now that $50,000 you have to pay off. Obviously, it's eased your pain, where instead of paying $5,000 every month, you're probably paying $1,000 every month. Yeah, it's going to happen over 5 years. You don't want to have this over 5 years, because what I find that most people don't do is they're not disciplined enough to stop using those credit cards. They continue to use those credit cards. You want to stop using those credit cards. You want to get them out of sight. Don't cancel them. Don't get rid of them. Just put them out of sight. It's funny. I had a friend who took all their credit cards. They put it in a bowl. They put it in ice. They put it in the freezer. It got frozen and just left it in there. Weird story, but hey, it works for them, because if you want to use it, you got to break that ice, so you got to let it melt. So debt consolidation definitely works. And like I said, you research and compare consolidation options to figure out what personal loans will work for you. So that way you can, whether it's all credit cards, that you can do credit transfers. But remember, while all these approaches are effective, the key is consistency, commitment to your debt, and a repayment plan and discipline. It is essential that you address the underlying factor contributing to your debt, bad habits, all these different things. You want to be able to figure these things out because they will help you. So hopefully you found this information. It's longer than I would like, but I think it's ultimately necessary that you are able to get this information. If you have any questions, do not hesitate to reach out to myself or Ralph. You can follow us, Family Man Building a Brand, on any of the platforms. See Me Fly is my handle _ Ralph Diesel is his handle. We'll put it in the show notes. Please reach out to us. We are more than happy. I am more than happy. It excites me to help people figure these things out, because I am helping you, but you are helping yourself become a better version of you, the you that you want for yourself, your family, and all that stuff. So hopefully this information you found useful. And like I always say, this might sound, it's personal debt, but if you want to get business credit, you have to get this together. It not only helps you get business credit, but it also helps you understand and discipline yourself. So when you access that business credit, you have the good habits to know effectively and efficiently how to spend that money to make sure you don't get yourself in debt. Because I think that's why we have $1 trillion in credit card debt or even more, because I think people are not disciplined, educated about how to control and manage their personal debt. So when they get all this windfall of money through all these people helping them getting business credit, they do the same thing. They make the same mistakes. Now they just have debt everywhere, and they're now going to kind of repair people's spending. So you just keep spending money, going through a perpetual cycle of debt. You don't want to do it. Educate yourself about money, educate yourself about your finances, educate yourself about all this stuff, and you would be better off for it. And you wouldn't have to keep spending money, paying people to get out of debt, because you're only accumulating more debt. Pay down your debt. It's the best way to get out of debt. Hustle hard, get a second job. I'm not a fan of hustle culture, but when you are in a hole, in a bind, you got to do what you have to do. So with that said, thank you guys very much for listening. Hope you found this useful. Please leave us a rating and a review. Let us know how we were doing. Let us know if you found this information useful. Please reach out. We're more than happy to help you figure this stuff out. But I appreciate your time. And until next time, this is a Family Man Building a Brand podcast. This is a teaching moment. And this is about money habits regarding debt and credit. Thank you very much.